The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We have a special guest today on the line now, Kyle Cooper, our energy specialist from Houston, Texas, who's a guest on CNBC and Bloomberg. Kyle, are you there?
How are you doing, sir?
I'm very good, my friend. Listen, the question that one of our listeners is asking is that we have this big storm, Gordon, coming in and a couple others behind it. What is your feeling on what happened to the crude oil and the heating oil markets yesterday? They looked like they were ready to explode to the upside, and in a matter of a couple hours, you know, the markets turned around. Any news on that?
Yeah, I think the anticipation was that the production curtailments of crude oil could be much greater than they actually were. Unlike natural gas, which is at multi-decade lows for Gulf of Mexico production, oil production out of the Gulf has risen substantially and stands at about 1.7 million barrels a day, quite significant. However, the BSEE, which is the Bureau of Safety and Environmental Enforcement, which issues kind of status reports on the Gulf of Mexico production, in their report yesterday, indicated that only 157,000 barrels of oil were offline. At the same time, there's still continuing concerns about trade tariffs and the economic implications there. So had a lot of hype in the morning about the potential for oil production curtailments from Gordon, but then the realization that it wasn't that bad and then other economic conditions helped weigh on the market as well.
Okay. Kyle, I have one other question for one of our listeners, and that is, how many different services do you use to track the weather during this hurricane season, or do you use anything like that?
Yeah, absolutely. I've got 3 different vendors that I typically rely on for mostly temperature forecasts for my storage projections on a weekly basis for natural gas, but then each of those services also usually provides a tropical storm update. And then the National Hurricane Center is a fantastic source as well, and of course that's available to everybody.
Well, we have one other question for one of our listeners, and that is about natural gas. Do you see any potential long-term for natural gas in 2018, you know, to say rally 20 to 25% from where we are now?
We need help from Mother Nature. Actually, this summer has been extremely bullish with heat spread across large portions of the country, and that's been a tremendous switch from the general bearish weather profile that we've seen since mid-September of 15. It was a very, very long, extended stretch of bearish weather. That has switched, but we need some help from Mother Nature. Now, I would say that I think the market in general is focusing way too much on the production levels here on shore in the Marcellus and the Utica for oil, and Permian and others for natural gas, and Haynesville. However, what I think they're really missing is while demand has been driven by heat, there's a lot of just baseload demand. The industrial complex across the Gulf Coast is surging. There's more houses going up. And in general, I think the demand side of the equation has really been underanalyzed, and I think is much stronger than a lot of people think.
Okay, the next question that we have is regarding crude oil. We hit a high of 71 and change yesterday. What do you see as the range here for the next month or so in the crude oil market? Do you have a feeling for that?
Yeah, actually, I think that in the upper 60s to right up at 70 seems to be a very reasonable place. The U.S. is still obviously seeing U.S. oil production rise. It was reported lower in June by the EIA, a little bit of a shock. But if you look at the company reports, they're all suggesting that oil production is going to continue to rise smartly. There are some capacity constraints from pipelines and such that are limiting some easy outflow out of the Permian, where Permian prices are discounted $12, $15 to WTI. But nonetheless, the production there is continuing to surge. The companies continue to get better and better. While a little bit of a boring, possibly a little bit of boring, but within a wide range as we've seen, I think in the upper 60s, kind of a mid 60 to low 70 type range is very reasonable. looking at overall economic growth and where inventories stand. So choppy, but really right about here. Sell to 72, buy to 66, 67.
Well, that seems fair enough. Now, I have one other question from one of our listeners. This will be the last one, and that is when you're looking at these markets on a little bit longer-term basis, when does the hurricane season stop being a factor for you as figuring in what might happen?
Well, if you go all the way back to the incredibly active hurricane season in 2005, 2006, we actually had a tropical storm all the way in January of 06. But the traditional hurricane season is considered to be June 1st to November 30th. And actually on the Gulf Coast, a lot of the activity is actually in September and October. So we're coming into the peak. And as you mentioned, after Gordon, there's a couple other swirlies out there. So just have to keep an eye out on them and watch them from a day-to-day basis.
Kyle, I want to thank you for joining us. I know you're really stressed for time today, but thank you for being on the show. And hopefully, if we have something else coming up, you could join us to give us your input. It was really great, and I enjoyed watching you on Bloomberg. It was really nice. So keep up the good work.
Thank you very much. Have a great day.
You bet. That was Kyle Cooper out of Houston, Texas. You bet. Thanks a lot, Kyle. Okay, he basically on the price objective that he's looking for, Mr. Z, is in the natural gas is pretty much around this level here, maybe slightly higher, is what he was referring to, as I recall. He said it would take some type of a weather-related thing, Mother Nature, to make it go sharply higher. But, the long-term picture in the natural gas actually looks pretty good. We've had a nice run up, and now we're going sideways at a pretty nice level. So the risk here, I think it's relatively small. If we take a quick look at this here on the futures side of this, you'll be able to see here that you'll be able to see where we are with natural gas right now. Let's just get this up here, and you can see here you could easily make that. See, once you get above that $3 level in the natural gas, you've got that larger ABCD pattern that'll be in effect, and that means that you'll be heading higher quite a bit. So right now, as long as we can stay above that 2.82 level, that's a very strong support. We hit it 3 days in a row, as you can see by the enclosed chart. That itself would be pretty strong, I would believe. And then any move above that $3 level, I think, would make this a relatively bullish picture. But as of now, we're in this trading range from June to September. And as he mentioned, the end of the hurricane season is usually the end of November, but, sometimes they go all the way out to January. So I'm often wrong too, Mr. Z. So that's all part of trading, folks. You got to be wrong in order to trade, because if you don't think you're going to be wrong, you're saying to the market, I'm always going to be right. And Mr. Market doesn't like to hear those kind of words. So remember that, being wrong is all part of the business. The real key is not in staying wrong. Change your opinion instead of losing your money. That's a very, very important words of wisdom from our esteemed hedge fund manager, Paul Tudor Jones. So lose your opinion instead of your money, and you'll be far. Focus on how much money you have at risk, not how much money you're going to make. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of the Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and continuing on with what we had heard from Kyle Cooper about the oil and natural gas and heating oil markets. I've posted the chart much like we did yesterday. This was happening on the air, folks. We were at that $71 a barrel level in the crude oil. Mr. Z and I think somebody else in the room was mentioning it, that we had a beautiful 61% retracement there, spot on. It was a head and shoulders pattern, and we've broken better than $2 a barrel. We're trading below $69 a barrel now, so that should be a significant top, but if we exceed that, then you'll be looking at much higher prices. I think what we need to do now is to get back to our usual spot here and take a look here at the German DAX like we usually do. As you can see here, we're coming down. We made a very small ABCD pattern here. We made a new bottom back into August. This should be a double bottom if it's going to be any good at all, whether it holds or not. The problem is we're in such a situation where we could be under some very, very bearish things, and I just wanted to get this up here to show you. This is the FTSE. As you can see here, you know, we're looking at the same thing. Of course, our markets are still way up in the air, but as we mentioned before, that could certainly, you know, have, that could easily change. If we take a look here at this S&P, let's just get it up here so we can get a rough idea of what we're looking at, because we had that big ABCD up there at 29.17. That was the high. We got as high as 29.12 yesterday. That was a 78% level. We came down, made a small 1.618 expansion. But folks, if we get below the 28.82 level, that's going to suggest that the market's going to come down to that 61% retracement from the August 22nd low. If you remember, that happened to be an eclipse, and that would be coming in at 28.75. Anything below 28.75 is going to be really bearish. That's you know, how I see it, and that's from the cheap seats in Tucson, Arizona. I've had a question about long-term trading. Silver still looks good. I think silver has a chance. We got down to that level of 1405. I sent that, in fact, we were on the air when that was happening. I sent out a video just as it was occurring, and we were making a 1.618 expansion on the silver, on Christmas silver down there at 1405. and that hit spot there. We're trading a little buck. We're trading about $700 above that right now, so it's acting like it's still got a pretty good chance. But any move below some of these things would, in these metals, would really make these things look very, very bearish. Just take a quick look here at Dr. Copper, folks. This is what we're looking at here. This is, we call it Dr. Copper because it coined the phrase from our good friend Rich Anderson. You'll notice that when we bottomed here on the 12th of August, that was the exact 61% retracement of the low from last October. There was a little butterfly pattern exactly at that point. You can see that in the dark blue triangles that are there. We had a nice rally that completed a 135 pattern. We came down, and whether we're testing the bottom here or not remains to be seen, but any close below 260 in the spot copper would be, I would think, be very bearish, because that would mean you'd be looking at another ABCD 3 drive to a down pattern that would take you down below the 61% retracement all the way to 245. My feeling is, by looking at the chart, I don't believe that's going to happen. But again, that's just my opinion, you know, and you have to do the work yourself, because you're the one that has to be able to determine whether you want to do that or not. Now, let's look at one other thing that we want to watch for today. We talked about it yesterday, and I think it's we hit it spot on last night. If we'll get up this price here for the Treasury bond market, we had a really nice ABCD. This is the one we talked about yesterday. The low yesterday was 143.25, one tick below the target, which was 143.26. We're now trading $500 higher than that. And if it follows on what it did during the BC swing, we could see a move as much as $1,500 higher. But if you did that trade, what you'd want to be doing now is to protect yourself, because you don't know what's going to happen next, nor does anybody else. Now, when you have a $500 profit, your risk is no longer the $300 that you've made, that you originally risked on the trade, but now your risk is $800. So the best way to handle that, from our perspective, is always worrying about the amount of money that you have at risk, is to move your stop to a break-even point. Because once you get to that break-even point, you're home free. You don't have to look at the charts. You just wait and see if it's going to do that. Here's where we were in the middle of the night last night. You can see here we had rallied only about 4 or 5 pips, but we've been all the way up to 144 and change this morning. So that certainly means that you want to lock in. At the very worst situation would be a break-even trade, because you know these things can turn on a dime sometimes, especially with all the news and things that are going out there in this crazy world we live in. So make sure that you always protect yourself, because nobody else is going to, boys and girls. Mr. Rogers taught us that when he was in our neighborhood, so we certainly want to keep remembering that is what you have to do. You're the one that has to protect yourself, and that is the key, you know, to what you're watching in here. Also, there's another currency that, there's several currencies that are at really, really critical levels. One is this, we have to watch this Australian dollar, folks, because we hit this number on the ABCD. The 786 is a little lower by just a little bit, but if you'll notice here, during the whole month of August, we've had this ABCD that we've been tracking, and we hit it yesterday right on the money, 71.40. We're now trading around 71.75, just, you know, off the bottom on that. So your risk on this, if you're looking at that, is very, very small, because if that is in fact a completed ABCD, and not only that, but it's an ABCD on the long-term weekly chart going back from January all the way into March, and then rally from March into April, that takes you down there to the 71.60 level also. So this could be a major bottom in the Australian dollar. Now, that'll be related possibly to China, because China buys so much of their raw materials from Australia. So this could be something that would be very, very interesting to see if that is going to be the case. So that's what we're going to be watching. Whether that's going to continue or not, you know, we have to wait and see. But these are the kind of things that we're taking a look at this morning. Now, since we were talking about the the currencies. Let's take a look at the euro. If you remember yesterday, we brought this to your attention because we had come down, and on Sunday night we had hit that double bottom, a beautiful ABCD pattern from the end of August into early September. Is perfect ABCD pattern coming in at 115.30. We've now rallied the 80 pips, which is the harmonic number. And as you can see from this chart here, that after we've done that, that was a 382 off the high and also a 78% retracement off of September 3rd, that we would be looking for a pullback just because of the fact that that 80-point move in the euro is many times a harmonic number, and that's what you'd want to be watching. And of course, what happened, if you were following it in the middle of the night, you'll notice that that's exactly what we did. We went right down and hit it, and we've already rallied back $400. So sometimes these patterns work, boys and girls. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the euro has just had a really nice 40-pip move. We've went back above that key support level at 116, which was very important, and this is a real. Now we're coming into some what we think could be some resistance here in the euro at this 116.30 level, but anything above that, and the way it got here so quickly, my guess is that we're most probably getting ready, to move higher, and whether we back off again or not, remains to be seen. One of the questions that someone's asked us from Hong Kong, I posted the chart in here for the Hang Seng Index. We have so many friends over there, and they're interested in this because if you'll notice here, folks, we had a beautiful 3 drive to a bottom pattern. The market rallied a good 3.5%, 4% over a 6-day period, making a small ABCD pattern, as you can see, marked in red. And then we alerted the folks to this spot because when you have an ABCD pattern coming off of a 3 drive pattern, it should be extremely strong. And this one couldn't take out the previous week's high, which is not a very good sign. And you can see what's happened. We had a big down move yesterday and again today. This tells us that this could be something quite sinister in the market over in Hong Kong. So we're going to be watching this very, very closely. But should we get below that bottom that we made just a month or so ago, that would be extremely bearish because it would be breaking a major ABCD pattern from a very, very long time ago. And that is not a good thing if you're long. So just make sure you protect yourself, because that's what you have to do at all times. Very, very important as we look at some of these things. There's another question someone asked about when Kyle Cooper was on, and he talked about the crude oil market and the fact that we made a double top in the heating oil market. Folks, that was happening on the air yesterday. We were looking at that because the market had exploded out of the 78% level due to the news on the hurricane. We went up and we made a high by $110 in a very, very volatile contract and couldn't go any higher than that. Boy, if you ever want a place to go short, I mean, that's a giant green light. And the reason why is you get above the yearly highs and there's no buying. My goodness, where's the new buying going to come from if you don't have it because of a hurricane? So the risk there was extremely small. Now, at the same time, of course, we were making a 61% retracement in the crude oil at that time, and we were watching that one. And crude is easier to trade, at least from the premises of what we watch for futures, and that's only because more contracts are being traded in the crude oil versus the heating oil. But anyway, it's backed off quite a bit. It hit a little bit of support down here at that $69 a barrel level, and whether that moves on up from this level, certainly, remains to be seen. So those are just a couple of the things that we're paying attention to tonight, and I think that it's something that we need to look at. Let's take a quick look here. This was the when we were listening to Jason Papp when he was on. You notice he was talking about Bitcoin. You'll notice that Bitcoin hit that beautiful 61% retracement. We had this in the letter on Sunday. We were expecting a possibility of the Bitcoin to possibly, get down into an area where it might back off. And then, of course, this morning, it's down over 400 points. And I believe we still got a chance for Bitcoin to get down to our original target, which is roughly $4,000 an ounce. And if you like Jim Twentyman says, defy human nature, do the work yourself. Take a look at the long-term chart going back to 2010 in Bitcoin, and you'll be able to see the 4 major corrections that they had, which were all about 80%. And they have some beautiful ABCD structures in there, and the final one comes in at roughly $4,000. You could take it down as low as 3,800, somewhere between 3,800, 4,000. We should see a major bottom here in the Bitcoin, and which is cryptocurrency, but it's all part of blockchain, and the jury's still out, I guess. But the jurists that I talk to sound like blockchain financing is here to stay, and that's going to be because these central banks have done some shenanigans, and people want to protect themselves against them, and whether that's going to be something that you can do in the future, remains to be seen. That's the main thing that you want to keep an eye on. Now, the other thing that we need to be watching, folks, is the corn market. The corn made a beautiful bottom down there. Let's just bring this up so you folks can take a look at it. That was something that we were paying really close attention to. And if you'll give me 1 second, there's Christmas corn. We'll get this up here. And we've had a really big move here. We're approaching, we might get, what our goal would be on this is if we could get the market up a little bit. We've already started to move higher. We're well over 10 cents off the bottom. Well, more than that. We're 14 cents off the bottom now in the December corn. That gives an ABCD pattern, as you can see, from the July low to the August high to the August low, which was a full moon back on the 26th, right at the 78% level at $358 a bushel, and now we're trading up around that 369 level. And whether that's going to be a top or not, will remain to be seen. But it started in the right direction, and that's it. The 3,800 is the number that I'm looking at. It's 3,800. To 4,000. And when you're talking about something that's had a high 19,000, I mean, the difference between 4,000 and 3,800 is pretty small, and I don't think it's going to hit an exact number, but you never know. I'll try to get a chart for that long term from my friend John Jameson, who'll probably help me out and get a chart and show you some of these corrections and stuff. But those are just some of the things that we're looking at. Folks, I have not placed a trade in a cryptocurrency as of yet, and so I'm just still studying the thing. But it's getting a lot of press. And today, of course, Goldman Sachs said they were not going to do any cryptocurrency trading, and that means they must be wanting the market to go down so they can buy it. They have a history of doing stuff like that, but we'll have to wait and see. And this could be a bubble type thing, but the charts are different than a regular bubble, folks. I mean, they really are different. I mean, this has come down very orderly from 19,000 down to that 5,900 level. So that's been an orderly correction. Usually, when you have a bubble form, it takes it all back right away, takes no prisoners. Those of you that were involved with WorldCom and also Global Crossing, if you remember back in the old .com bubble area, I mean, they took no prisoners. Once they turned lower, that was it. And they Sycamore Networks, I had some friends that had been in that. They got out of it relatively well, but the stock went down, better than 99% of the gains that it's had. So that's something else that you want to remind yourself. Now, I did want to bring yourself to this one little thing. I want to talk a little bit about the capital flows that we're having in the Chinese renminbi. And we talked about a little bit yesterday, but basically what this is showing is that capital is leaving China, and that's not a good thing. And that's one of the reasons why China is so against cryptocurrency. 75% of the mining for cryptocurrencies, folks, comes out of China. So there's some big things happening there, and so we got to pay attention to, what that RMB is, the yuan or the renminbi is going to be doing, because that could be a tip-off to what's going on with these cryptocurrencies or blockchain even. So we'll take a little break. We'll come back and look at some grains. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to bring up the chart of the corn. As you can see, we're trading up around the 369 level. It's up 11 cents, actually, from the low. That's just a normal, quiet little rally. Nothing really dramatic has happened as of yet. But the one that I would like to bring to your attention, and that is a much more active market that has a whole lot of volatility and, of course, greater margin and bigger swings, is the November soybean contract. This is the soybeans that are in the fields. They're going to be harvested here pretty soon in the next month or so. But I'd like for you to look at the time period from back there in late August. You'll see that 3-drive pattern. And remember, this is a 15-minute chart, so you can get in without risking an arm and a leg. And that's why I watch it on a 15-minute basis, because it hits the numbers, you know, extremely well. And as you can see, since we made the bottom back on August the 30th, we've had higher bottoms. We had a higher bottom on the 31st. We had a higher bottom on the 4th. We had a higher bottom yesterday, and we're having one today. So these are all retracements. You can see each one of these is either an exact 61.8% retracement of the previous swing low or 78.6% of the previous low. So this is what you try to do, is when you're watching these things and you think that the trend is up, you'd like to be buying on that pullback. So watch what these corrections are going to be. Now, you have to be ready, because one of these times they're going to go through those to the downside, and that's going to make it, you know, pretty nasty. But whether that occurs or not, you know, we still have to wait and see if that is going to be the case. So let's just keep an eye on that. It's very, very important that you watch these, because once they go through these numbers, either on the upside or the downside, it's usually telegraphing that it wants to head to a different level. I had a very interesting question by email last night. I really didn't know whether I was going to answer it or not, but the question was, what has been the most critical times in your trading career? I thought about it quite a bit. I spent a little bit of time this morning trying to figure out, and I would have to say 1974, which was the big crash. And each one of these folks that I went through, it came out better than, I mean, it looked bad at the time possibly, but it came out a lot better, you know, overall. But some of them were, you know, pretty significant. The 1974 bottom, we had a double bottom in stocks at that time. I was in the futures markets, and they were decimated during October and December 1974. 1985, of course, was the meeting at the I can't remember the hotel. Oh, shucks. Oh, in New York. Doggone it. Anyway, it was 1985, and we had a big meeting on foreign currencies there, and that changed a whole lot of things. And then, of course, 1987 was the high, and on the October crash, on that October the 16th, which was a Friday, I was short 4 S&P, which was equivalent to 40 of the E-minis that you have now, because it was 10-to-1 was the ratio. So I was short 4, and I gave the broker an order to add 4 more right on the close, and the broker not did he add, but he took off my 4 contracts. He misunderstood that I wanted to add instead of taking profits. I had a nice profit because the market was down in the Dow Jones was down about 100 points, and that wasn't too much in the S&P. But the next day I should have been short 8 S&P, and it was down over 100. And if you multiply 100, times the value of the contract, you're talking about $50,000, and you multiply that times 8, and that gives you a pretty big number. That was not a big deal. Well, it was at the time. Later on, it turned out to be okay. 2009, of course, was really big because we had been bearish from 2007. On March the 9th, 2009, absolute major bottom, and that was the easiest bottom we've had in a long time. I mentioned that that was going to be the biggest rally since 1938. I was wrong by about 40 years because it continued to go up and make new highs. And then the big one was in 2012. That's when Peregrine Financial went bankrupt with Russell Wassendorf, my friend from about 40 years, and he did the same as Mr. Madoff did. And then, of course, where we are right now, boys and girls, I have to tell you that there is something going on in the market, not only in the markets looking at these patterns and things, but on a personal basis, things that I see that are going on that, they're just things that I'm not really at liberty to discuss, but I can tell you some big things are really happening, and I don't know what the ramifications are going to be, but I see it in the market that this is probably going to be the high that we're going to be looking at for a very, very long time. Remember, September 3rd of 29, it took 27 years for that stock to go out. Whenever this market does top, and I won't say that the top is in until we're below 2,800 in the S&P, then I would say, yes, that top is in. We will not see that high in my lifetime unless I live to be 130, and I don't expect to see that. So those are just a few inputs. And remember, those are my opinions. And, opinions are like armpits. Everybody has one, and it usually smells. So pay attention. You got to do your own work. Make sure that you're looking at the charts the way you like to see them, and make sure that the numbers line up and that you're able to control the risk and not worry too much about how much you're going to make, because you never know what's going to happen with that. So keep an eye on it. We've got some really interesting things in the market at the present time. With many of the stocks that we're looking at are still in way short of their old highs. It's only about 20 stocks, the FANG stocks plus a few others, that are going, really straight up to the upside. I haven't even checked the markets this morning. Let's see. We're having a little bit of a rally here. We're rallying up here at we're around 28.94. The S&P we got down as 28.85. The high yesterday was 29.12. So we need to pay attention. The gold and silver are moving nicely. The euro is moving nicely. And we'll see how the rest of these things hang up. The Treasury bonds have backed off right to the to your break-even point. So if you took the profits, had almost $500. Yeah, you did have $500. You're back to either a really good buy right here at 143.25, or it's getting ready to go lower. What I would do is I would wait one bar, because you're in an hourly chart here and you've already made your money. So just be patient and make sure that the 143.25 level is going to be an important level. In 1 hour, you will know whether that is correct or not. So pay close attention to that one, because longer term, of course, the interest rates look like they want to go a great deal higher. Interest rates are going to go higher. The $64 question is the head and shoulders pattern that is in process of forming here is going to be able to hold. So this level we're watching this morning at 143.25 in the September bonds, extremely important. So we want to watch this as we start to look at this. Question about Tesla. Folks, I know about as much about Tesla as I do kidney transplants, and I don't know anything about those. So, it's always in the news, and you have some people that thinks it's going to zero, and some people think it's going to 4,000. Take a coin, flip it, and take your choice, because I will tell you this, before it gets to 4,000, it has to close above 385. And 385 was a double ABCD pattern, spot on in the midst of all that big news of the potential buyout, going private and stuff, which turned out to be bogus. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the gold and silver. You can see the gold chart has a beautiful ABCD pattern. It missed the exact D point by $1.50. Now, we've only rallied, $7 or $8 off the bottom, which is, substantial, but not really very much at all. But if we take a look at the silver market, and this was happening as we were speaking yesterday, if you recall, we were down at that 1.618 expansion down there. We've already rallied a little more than $1,000 in the silver in one day. So here again, this would be the kind of trade that you'd certainly want to protect some if you did that trade. That is a big 1.618 on the long-term daily. And as we've seen on the long-term weekly, it's also the 78% level, much like we made back several years ago, back in 2015. So whether this bottom is going to hold or not will have to remains to be seen. The open interest is not giving us any help at all. Even though we had a lot of volume yesterday, the open interest was still higher. And since the market was down on the day, you have to assume that the shorts were still in control, but the shorts are a little bit in trouble today as the market is rallying. So pay attention to that. The stock market overall still looks bearish. Watch the S&P, because if you can't rally any more than 29.05 this morning, that would be what I would think would be a relatively negative sign, because that's an important thing. And of course, watch these Treasury bonds, folks. They are completing this ABCD. We've made new lows in yesterday, which is not unusual, but we're still only 2 pips away from that level of 143.25. And it's already, if you did the trade last night, as you mentioned, you had well over $500 in it. And so at the worst, you would have broke even or made $500. But watch it, because if it can get back above the 144 level again, it's got a chance to have a pretty substantial rally. And we are in the midst of a potential head and shoulders pattern. If you follow the newsletter, you'd be able to see that easily. So pay attention. Norm Winsky, tomorrow's our guest, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!